Hi there, good morning. You've tuned into ET now. This is Bayan Asal now with me, Shail D'Souza. Along with me, I have Shrishti Sharma. A very good morning to you, Shrishti. Bright morning, bright Friday morning actually coming in for the markets, given the fact that we've hit a fresh record high level when it comes to the Nifty. We've surpassed the previous record high level of 21,834.35. But there you go, on your screens, record high inching closer to that 22,000 mark for the Nifty now. If you look at it, 21,845 is where we are hovering around, almost a percent gain coming in for the Nifty. And the star performer in today's trading session has to be Infosys. Look at the way how Infosys is gaining in trade today, a sharp uptick, biggest intraday move coming in for Infosys since July of 2020. So sharp move coming in for Infosys, 7% uptick on back of good deal wins that they've recorded in the quarter gone by. Also, along with Infosys, you have TCS also that you're seeing a smart rally in today's trading session, given the fact that that one also has posted good set of numbers coming in, and the management is in fact sounding more positive, more optimistic. So that all of that is actually reflecting on the indices today. If you look at the Nifty Bank, tad bit of underperformance when you compare it to the Nifty, but nevertheless Nifty is scaling higher, hitting a fresh record high levels in today's trading session, Shrishti. And yes, looks like 22,000 is not too far away when it comes to the Nifty now, isn't it?
Well, yes, Cheryl, great gains coming in for the benchmark indices. And when we started the day, definitely there were hopes that IT will do well on the back of the results. But this particular move that we are seeing in Nifty is a bit surprising. But nevertheless, it's a happy Friday indeed. And that's great to hear. Even the broader markets are quite supportive in today's trading session.
Right, absolutely. A happy Friday for the markets, and not only because the markets are rallying in trade today, it's happy Friday because today it is BNS and Pathshala Day, and we have Kunal Bothra joining us on the show to teach us something new today. And Kunal, yes, definitely, how can I not talk to you about Nifty? The fact that we've hit a record high level once again in today's trading session, 22,000 not too far away, and looks like your target of 25,000 for the mid-year is also not far away, isn't it?
Yeah, it's getting closer by the day, and I think it's a good sign that we finally managed to break past about the previous highs of 21,800 plus on the Nifty. So, and again, I think interestingly this time around, the large cap stocks are firing up. So, I think that's one of the more confident signs for the markets that this time the breakout for the indices would not just sustain, but even build from current levels. Now, on today's topic for Pathshala, it's interesting. One of the more prominent technical terms which we generally talk of, golden crossover. So the golden crossover typically means that when the 50-day moving average for any kind of a chart, asset class, index, etc., breaks past about the 200-day moving average. We call it golden crossover because golden is generally termed as a metaphor, where once the stock gives a golden crossover, we expect the trends to pick up, for the stock into more of a stable uptrend, and the stock generally goes into multi-year, multi-month, multi-quarter cycle of uptrend post that. So we look at a couple of examples of how golden crossover generally helps stocks to try and gain momentum, steady the rally, as well as build on to the positive momentum for themselves. So this is the charts for IndusInd Bank. The blue line, as you can see, is the 50-day moving average. The red line is the 200-day moving average. The moment the stock had given a golden crossover up move, this was in the month of June 2023. Look at the consistency of stock post that. So which means it's the start of a literally like a golden period for the stock, where it tends to build up gains, moves into pattern of higher highs and higher lows, and then breaks past about the resistances with a lot of ease for itself. So this was a point where the golden crossover happened for the stock around 1250 odd mark, and currently the stock is placed almost at that 1650, 1660 levels. This is in the span of the last 7-8 months for the stock price, and that's the impact of golden crossover which happens. Interestingly, if you can see that the 50-day moving average has been acting as a support or a reference point for the stock whenever it scales down or gets into a mild phase of consolidation or mild phases of correction. We look at another example more on the FMCG name, a low beta stock as such. The golden crossover happened in the month of again May, June for the stock around 1600 mark, and look at the tenacity of the stock which picked up pace. So FMCG is typically considered as a low beta stock. The movements are a bit more shallow as compared to rest of the other sectors. But then from this period of golden crossover, we've actually seen the stock climbing up at least 800 to 900 points. So from 1600 odd levels, the stock recently touched a high of 2500. Again, a very similar kind of an observation that post a golden crossover, the 50-day moving average acts as a support or a reference point. So this becomes a good buy on dips opportunity for traders who've missed out on the earlier rally for stock prices.
All right, thank you so much, Kunal, for helping our viewers understand about the golden crossover and how by spotting a golden crossover, they can definitely look out to have great gains. So that's all about buy now, sell now, Pathshala for today. But before we slip into a very short break,
Welcome back. You're watching Buy Now, Sell Now on ET Now. A great day going in for the markets. We've hit a record high level when it comes to the Nifty. You also have good moves coming in for the IT index in particular, given the fact that you have stellar earnings coming in or good earnings coming in from Infosys as well as TCS, and the brokerage community giving a thumbs up, and that's actually trickling into the rest of the IT pack as well. But let's move on and let's actually do what we exactly do on the show. We take your query, viewers, so you can write to us on the WhatsApp number that is actually flashing on your screen. Do remember, each time you write to us, mention the name of the stock that you're looking to invest in. If you're already invested in the stock, then do remember to mention the buy price, the quantity, as well as the time horizon, because in that way our experts will be able to help you better. And talking about our experts today, we have Kunal Bothra, who's joining us on the show. Along with Kunal, we also have Ashish Kapoor. Very good morning to you, Ashish, as well as Kunal. Thank you so much for joining us on Buy Now, Sell Now. And let's kickstart with the queries are already pouring in, and this one is actually coming in from Sayak from Bangalore. And Kunal, I'll come to you because he has Persistent, 20 shares of Persistent at a price of 6,366 rupees per share. Dixon Tech, 20 shares at a price of 6,470 rupees per share. He wants to know whether he should hold on to both of them or instead look at booking profits and transfer that money to Reliance Industries and L&T.
No, I think it doesn't make sense to hold on. I mean, to shift to Reliance and L&T at current levels. The only catch is because both the stocks which you already have are slight high beta in nature, and these stocks have done pretty well, which means that the momentum and the trend is quite strong for these stocks. Yes, Reliance and L&T both also look attractive on the charts. I think we flagged off a potential target of say 3,000 approximately for Reliance Industries, and and I think another 8-10% higher for L&T. But I believe that the potential returns on the upside for Persistent as well as Dixon could be a bit more higher. So I would probably want to would suggest to stick on to these two names. In case if you have extra or surplus cash, only then deploy into the other two large cap names.
all right, moving on to the next one. And Ashish, this query is from V. Ravichandran, and he wants an advice on two counters where he can go ahead and maybe invest for the next 3 years. Orient Paper as well as Emami Paper, two counters from the paper sector. Can he at current levels for a reasonable return expectation? And from the paper sector, any other stock that you like at this point?
Well, frankly, I haven't looked at paper sector very recently, so it's best that I don't comment on it.
No worries, but Kunal, anything on the charts that you can help him with?
So Orient Paper is something which I think on the short-term charts is getting into a bit of a reversal mode, but nothing exceptional in terms of the charts for the stock. JK Paper is something which has been doing pretty well. So I think I would probably want to recommend maybe JK Paper if you're looking at specifically the paper names.
All right. This one is coming for you, Ashish, from Rashesh Shah, who is writing to us from Vadodara, and he has 90 shares of Torrent Power with a price of around 731 rupees per share. He wants to know whether he should stay put with this one or look to exit. What's your take coming in on Torrent Power when you talk about the entire power space in particular? He is making healthy set of profits. Stay put with this one or look to book profits now?
No, I think stay put. I think the going will get better only as we progress. And I think power sector as a whole has a lot of tailwind now. And I think stocks are going to do well, including Torrent Power. You could also, if you want to really diversify, could also look at maybe adding NTPC and REC also along with it, and just to kind of diversify your portfolio. Otherwise, Torrent Power itself should be okay, should be doing very well.
Pradeep wants to have a take on RPG Life Sciences. He's already holding around 20 shares from a price of 790 rupees. Any advice on this particular stock for a long-term investment?
Well, I think this again, the business prospects are very interesting and look very robust. So only thing is very illiquid stock, and also the earning growth is not going to be linear. So do remain invested only if you have a fairly long-term kind of prospect on it. Other for the long-term perspective, it looks also looks very interesting, but may take time, and also it's not something which is really linked with the market or having a very linear kind of a growth trajectory going forward. So only if you can stay invested for long term and not bother about short to medium term fluctuation, then stay invested.
Coming to you, this one is from Sumedha, and she has 500 shares of Equitas at 84 rupees per share. Phenolix Pipes, 1200 shares at a price of around 145 rupees per share. Wants to know what should she do with both of them. Look to add some more in the portfolio or look to exit?
Yeah, Finolex pipe is something which you can add at current levels. Equitas, I would suggest to hold on. Both the charts are attractive, but I think Finolex pipe, that's a stock which is confirming a breakout of a swing resistance for itself. So I would suggest that.
Okay, Kunal, another one for you. This one is from Ravi, and he's holding 1,000 shares of NLC from a price of 235 rupees. Can he? Do you have any targets on this one? And if he continues holding this till March, then what to expect?
So I think it's Navali Lignite, and the stock has done reasonably well in last again 6 months, 12 months. Looking at the PSU rally for many of the stocks. Now, if I'm not wrong, the stock is coming back towards the 2009-10 breakout levels. So I think the 2009-10 highs for the stock is closer to 277 to 78 mark. So I would sense that possibly give it another few months. If this rally sustains, then I believe that the previous highs 270 plus should be taken out for NLC in this phase of the rally.
All right, let me take the next one from Usha, who's writing to us from Karnataka Bank, and she's bought about 75 shares of Sona Comstar at a price of around 615 rupees per share. The stock right now, if you look at Sona Comstar, it is off the day off her buying price. So she wants to know what should she do with this counter? Stay put with Sona Comstar or move on to something else altogether? What's your take on this, Ashish? Stay put with this one?
Yeah, I think so. I think you can stay put. I think the stock, the company has good prospects going forward. So you should be able to recover your, buying and also make some profit on it.
All right, moving on then. And Kunal, the next query is from Renuka. And she is already holding Tata Steel in a portfolio from a price of 105 rupees. Good time to book out profits and rather make an entry into Tata Tech?
No, I think, so Tata Tech I can't comment because of the recent history for the stock, but Tata Steel I think is just warmed up to a potential breakout for itself. So it's been an underperformer of sorts when you look at the entire metals pack. So I believe and the stock in the last few weeks has been showing that slight degree of momentum. So if it picks up pace, I believe that the stock should be good for a very strong upside. I think you should continue to hold on Tata Steel.
All right, this one is coming in from Raman, and he's looking to buy Aster DM Healthcare. He wants to know at current market price, does it make sense to go ahead and buy Aster DM? What's your take, Ashish, on this?
Well, Aster DM, again, I haven't tracked lately. I don't want to comment on it.
On the charts, Aster DM at this price, do you think it makes sense? Is it attractive?
So short term wise, it can be attractive. The stock is coming out of a 2 month of consolidation, but then I'm not sure whether from a recent or from a medium term charts, whether the stock could probably provide any major upside, because the stock has not yet completed a mean reversion. So I think closer to the 50 DMA, which is currently placed at 375 approximately for the stock, is a much better level to buy. So if you are, it depends on what's your time frame. If you are in for say 3 to 6 months time frame, then wait out for 375 or a retracement towards the 50 DMA as a good level to buy. But if you're looking at the short term play, then you can consider buying at current levels and then maybe exiting close to 430, 435.
All right, another one for you, Kunal. This one is from Saurabh, and he has bought Zuari Agrochemicals from a price of 205 rupees. Can he continue holding this for a medium term?
I don't track the stock, so we'll skip this one.
Okay, Ashish, any take on this counter?
Zuari Agro, I think the stock is actually quite good. The company is doing quite well, and I think the sector itself is going to get a lot of traction going forward. So yes, he can continue to hold on to the stock.
This one is coming in from V. Murali, and this one is for you, Ashish, in particular. He wants to know about Uflex. Can he look to buy this one at the current price for a period of 12 to 18 months? What our viewer has to say is the company has new products expansions that is slated to be completed in FY25, and he's wondering that if it's the opportunity pretty attractive to invest in the stock right now.
Yeah, I think so. I think the sector itself, because the user industry is going to go through a lot of expansion now, I think going forward. I mean, in particular, the FMCG, companies are going to now experience a lot of growth with the kind of, consumer income going up. So I think Uflex should do well. It seems to be a good idea to buy at the current rate.
All right. The next query that I have is from Rakesh from Delhi, and he's bought 2,500 shares of First Source Solutions, First Source Limited, Kunal. His buying price is 141 rupees. Can he go ahead and stay invested for the next 2 years maybe, or good time to book out profits?
I think it's a good stock which you should hold on. I have been tracking this stock very regularly in terms of the IT and the mid-cap IT names. I think the stock has done exceptionally well. There was this major base formation or a bottom formation closer to 120 range for FSL, and from there the stock after spending a lot of time has started to get into a trending mode. I think if I'm not wrong, it's yet to break past about the 2021 or 22 highs for itself, which means that in this leg of rally where there is confidence which has started to build up into the IT names, there could be more upside left for many of the mid-cap IT stocks. I would suggest to hold on.
All right, we have a query coming from Siddharth from Bangalore. He wants on the technical front, Lakshmi Organics. Kunal, how does this one looking to you? Because he's holding Lakshmi Organics from the current market price, and he's considering that the chemical stocks may rebound in the year 2024. He's wanting to stay put with this one. So does it make sense to stay put with Lakshmi Organics? And also he wants to know which is your favorite stock in the chemical pack.
See, I've been tracking the stock Lakshmi Organics, but surprisingly, the stock has not given any kind of a major breakout as such. It came very close to the 300, 320 mark twice, but then the stock has failed to surpass those levels. There was no major volume trigger consistently for the stock, except for maybe fewer days of volume. So I would probably expect that maybe the stock could remain to a time-wise consolidation. So patience is required. If you are a long-term investor, only then it makes sense to hold on to the stock. Otherwise, I think it could make a lot of sense to switch to other names. Difficult to pick just one or two chemical stocks, but I think Tata Chemicals about that 1100, 1120 mark is something which looks attractive from a short to medium term play.
All right, then that's the view coming in on Tata Chemicals as well. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back to take more of your stock-related queries. Welcome back to Buy Now Sell Now, a show where we get you answers for all your stock related queries. And continuing the same, the next query that I have, Kunal, is coming from Srinath, and he wants a short term view maybe for the next 3 months on two counters. Firstly is BDL, Bharat Dynamics, and he also wants to have a take on Mazagon Dock. Can he go ahead and buy these at current market price?
So BDL as well as Mazagon Dock, both you can consider buying at current levels. Both of these stocks are going through their own time-wise, price-wise consolidation. Moving averages have plateaued out. The indicators have also cooled off for these stocks over the last few weeks, few months of this consolidation. So you can look to go ahead and buy both of these names.
Kunal, coming back to you, because Sonia from Delhi wants the very near-term target for AB Capital as well as IEX from current levels. AB Capital was among your buys today, isn't it?
Well, yes, and I think from a very near-term play, I would probably look out 190 as a target for AB Capital, but my medium-term, long-term targets are extremely bullish on the stock. So I think it depends on what's your time frame, but if you're looking at for the next 1 week approximately or so, then I think 190 could be a target for the same. IEX on the other hand somehow has been taking resistance at this 170, 172 odd mark. So from a near-term play, if it breaks past about 172, then maybe a new trend could begin for the stock. But if not, then I think 170, 172 could be a potential target range from a near term.
All right, Ashish, the next query is from Peter, and he wants to know, can he buy NMDC at current market price for the next 3 years?
Well, definitely, I think the kind of re-rating which we are seeing across the board in PSU stocks, I think NMDC will continue to do well, and I think the stock, despite the run-up, still is available at a very decent valuation with a very good dividend yield. So I think certainly, and also I think the user industry are doing very well, and I think NMDC will get the big advantage of that. So I think yes, go ahead and buy.
This next one is coming in for you, Kunal, from Puneet, and he wants to know about BPCL as well as Apollo Tires, and he wants a target for this month itself. BPCL he has from the price of 465 rupees per share, Apollo Tires from the price of 475.
So BPCL is more of a conditional play because the stock somehow in the last 4 or 5 days has seen 2 or 3 rounds of sudden correction. So I think from 460, 465, all of a sudden you see the stock dropping down towards 440, 445, consolidating for a couple of days and then moving back towards 460 levels, which means that the stock is getting ready for a breakout, but then it's difficult to time it that whether it will happen in the next 2-3 weeks or not for BPCL. But I would believe that 465 approximately could be a breakout for BPCL. If it crosses about those levels, then you can probably expect targets of even 500 for the stock in a very near to medium term. Apollo Tyres, on the other hand, the stock is looking attractive. You can keep a target closer to 482 from a month-end perspective.
All right, Ashish, the next query is from Guru and he wants a view on two counters, Orient Cement as well as Indraprastha Hospital. Long back he has bought these shares both at a price of close to ₹90 rupees. What's your takes? He's sitting at a good profit in stock like Orient Cement as of now, and Indraprastha Hospital is also something that he's holding. What will be your view? Good time to book out profits?
Well, I would think Orient Cement, yes, you should look at booking out profits. I mean, the industry has done well, but it is cyclical at the end of the day, and so there would perhaps be a downturn at some point in time in the future. And relatively, this is a smaller company, a more mid-cap kind of a thing, so it will be also more volatile. So Orient Cement, I think you should book out. Indraprastha Medical, again, in the industry, the leaders. I mean, this also is doing very well, but and it has a more secular kind of a growth story. I mean, you could look at buying the main company, which is Apollo or even Max Healthcare, but otherwise, if you are okay with some kind of less liquid and more volatile kind of a stock for the long run, then you could continue to hold on to Indraprastha Medical also. Else, you could look at adding either Max Healthcare or Apollo Hospital itself to this and make it a little more diversified basket of healthcare stocks.
All right, this one's come from Poonam, and Poonam has 200 shares of IDFC First Bank Kunal at a price of 125 rupees per share, Global Spirits at 50 shares at a price of 860 rupees per share. What should she do with both of them, and what sort of target to keep in mind?
So IDFC First Bank, I'm extremely bullish. Again, I think if you have a time horizon of say few quarters or at least the next 1 to 2 years, then you can probably keep a target of 108 to 112 on IDFC First Bank. For Global Spirit, the stock has come back towards a major multi-month support, but then it lacks momentum. So the only concern is that how much time can the stock spend at the current levels of 830, 835 approximately. So you can probably hold on to the stock as of now, maybe look to average closer to 800 levels. But then in terms of targets, it only will depend once the stock starts to get into a breakout mode. So maybe 950,000 could be a potential target once the momentum picks up.
All right. Kunal, the next query is from Neha, and what she is highlighting is that she is making 30 to 40% profit in 3 counters. So, Wayne Life Sciences, Manappuram Finance, as well as Alok Industries. She is also highlighting that amongst these two were your recommendations. So, can she go ahead and hold these for the next 1 to 3 months and any potential targets?
See, Alok Industries, if I'm not wrong, is a small cap kind of a name, extremely steep run up in the last few weeks or months. So I believe that it makes sense to exit this stock. Manappuram Finance as well as the first one which you mentioned was
Suven Life Sciences.
Yeah. So I think both these charts are pretty strong for themselves. Manappuram Finance, even though the stock has gone through a lot of negative news flow, the time and again you see the stock going into a knee-jerk price action on the downside, and then slowly and steadily it gets into a recovery. This indicates that the stock or the medium-term trend for the stock is still intact. My sense is that the stock should at least scale past to that 200 plus levels, say over the next 3 to 6 months. But then the stock is volatile in nature, so you'll have to be a bit concerned over there. Suven is a breakout stock, so I would suggest to hold on to both of these two names.
All right, Ashish, this one's for you from Devashish from Kolkata, and Devashish wants to know about Map My India, 50 shares at a price of 1,992 rupees per share. Wants to know whether he can hold on to the stock for the longer term for better wealth creation. What's your take on this one?
Well, certainly he can hold on because a very unique company, and I think doing very well. And I think in the listed space, at least there is no comparison with this company. It's a very unique, product and a very unique model. And I think going forward, as we progress, I think their services would be more and more required by various customers across the board, including retail as well as different companies. So I think certainly hold on. I think this is a very secular growth story here, and you got it at a very good level. Certainly hold on.
Okay, that's a hold coming in on Map My India. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back. Welcome back. You're still tuned into Buy Now, Sell Now on ET Now. Let's keep it going with all your stock-related queries then. And the next query that I have is a short-term query, Kunal, coming from Krishna from Mysore. And he has purchased Asian Paints from a price of 3,184 rupees. What's the short-term outlook on this particular stock? Is that a hold or sell?
Well, it's been an underperformer. I think the last 3 months, look at the last 2-3 weeks for the stock, as well as compared to the 2022 highs, the stock has been unable to surpass the previous swing highs. In fact, it's been making a consistent pattern of lower highs over the last 1 to 2 years. So I'm not sure whether from a near-term play there is any kind of a major catalyst which could spur up the prices for Asian Paints. But I think unless the stock breaks past about the 3450 mark, which is the first major swing resistance for the stock, I would probably expect that the stock would underperform. So you may continue to hold on to it, but I think only about 3400, 3450 mark is where momentum would increase for Asian Paints. Till then, the stock may continue to consolidate as well as correct and underperform the benchmark analysis.
All right, moving on. Let's talk about Realty Pack then, Kunal, because you have Ramamurthy from Bahrain who has Prestige Estates, which has run up a lot. He wants to know whether it's okay to buy Prestige Estates even at these levels. Also, he has Godrej Properties in his portfolio where he's making 35% profit, so it makes sense to book profits there.
So Prestige is what I would believe that could be a good time where you can look to start booking out profits, maybe 50% profits at current levels and then trail your stop losses. Godrej Properties on the other hand, the stock still looks attractive. I think it's not yet broken past about the 2021 highs, so that's a stock which I would suggest to hold.
So basically he wants to buy Prestige Estates now, so you think it's...
No, I would not recommend a buy on Prestige Estates.
All right, what about DB Realty?
Yeah, that's a much better name. I think it just recently crossed the 200 levels, has been on my radar, looks very attractive relatively.
All right, Ashish, the next query is coming from Rebecca, and she has bought 50 shares of GAIL from a price of 163 rupees. The stock is doing pretty well today, but she wants to know, should she book out GAIL or move out of GAIL and rather go ahead and buy Infosys, which is on the roll today?
And they're very different kind of stocks in different industries. So, I mean, GAIL, firstly bought at quite a high rate. I mean, the real great time to buy GAIL was when it was around 100 or even less than that. You bought it at a higher rate, but having done that, I think the whole sector itself is doing well, and all these oil companies, especially the oil and gas companies, especially the government-backed ones, are getting re-rated. So I would think that you should continue to hold on to. Infosys is a different story, and Infosys is the different sector, is a different thing. That is there itself no point buying today after the run up which is had. That you will have to wait for a decline. But GAIL, I think you got it at a higher rate, but continue to hold on, is my opinion.
Right, this one is coming in from Pavitra, who's writing to us from Bangalore, and she's been writing to us consistently, but we've not been able to take a query. Apologies for that, Pavitra. She has one Nestle share which she had bought it before the split at a price of 26,876 rupees per share, and the very next day after she bought, the stock got split into 10 stocks. Now if she sees the price that it's adjusted, she's seeing some losses on that particular front. She is a very short period or short term investor, Kunal. Now what should she do? Make sense to stay put with all the stocks of Nestle that she has, or should she look at some other avenues altogether, because she's a little perturbed about the losses that she's making now?
See, I understand the pace of correction has intensified, but then that generally happens when stocks go into these kind of corporate rather special situation events. We've seen that happening for many of the stocks historically also. So this is the phase of sell-off for Nestle where some positions may be unwounded. But then I would believe that look at the pedigree of the stock and the way the stock has been one of the strong leaders from a longer term perspective. Now short term wise, if you ask me, I would probably expect maybe 2,600, 650 as a potential case where the stock can rally up towards. If you look to shift to some other name or some other stock, you can either look at Infosys at current levels, or if you're looking at it from the mid cap arena, you can consider Voltas at current juncture.
All right, Ashish, the next query is coming from Govardhan. He's a senior citizen writing to us from Bangalore. What he's saying is that he's holding 1,000 shares of Jaicorp. He actually didn't share his buy price in this one, but looking at the stock right now, would you still suggest him to hold on? Any good potential, like return potential that you're spotting here?
Well, I don't think so. I think frankly there are many better ideas in the market today than Jaicorp. So I don't think so. I don't know what was the reason, what was the price, and what was the perspective. But I think better to get out of here and put your money somewhere else. There are many better ideas in the market today.
Let's kickstart with the rapid fire then. Kunal, quickly, Olectra Green Tech, Godrej Consumer, worth a fresh buy? Shivanshu is asking.
Well, yes.
Okay, Ashish, Sangeeta is holding Samvardhana Motherson from a price of 99 rupees. Is this a good stock to continue and hold for long term?
Yes, it is.
All right, this one is coming in from a viewer who wants to know, who's a senior citizen, wants to know Siemens a good buy right now, Kunal?
Yeah, I think at current levels of 4,100, good buy.
Kunal, what's your take on Ashok Leyland? Arvind has bought 150 shares at a price of 165 rupees. He can continue holding it for the next 1 year.
Exit and shift on to either Hero MotoCorp or maybe Tata Motors.
All right, Jaya from Bangalore wants to know about Infosys. 1,633 is a buy price. Good time to continue to hold on to this one, or what strategy should she use? Ashish.
Sorry, we're talking about Infosys.
Yes, Infosys, the buy price is 1,633.
Yeah, certainly hold on.
Okay, Ashish, what's your take on Marico? Anupama is holding 100 shares from a price of 549 rupees at a loss, but is this an exit or she continues to hold on?
Hold on for the long run.
Kunal, Easy Trip is the stock. Sukumar from Chennai has 1,800 shares at 40 rupees per share. Should he stay put, exit?
Stay put.
Ashish, B. Soumya wants to know, can she go ahead and buy Irida at current levels for a medium term?
No, I avoid it.
All right, this one is coming in from a viewer Manjunath from Bangalore. Wants to know about Tilak Nagar Industries. Good buy for a period of 2 to 3 years. Ashish?
Yeah, certainly. Go ahead and buy.
Okay, Kunal Sharma is holding HDFC Bank from a price of 1,600 rupees. Is that an exit and switch to some other names in the technology space?
Not really. I would suggest to hold HDFC Bank.
All right, Anwar has bought Angel One in August. It's more than double. Should he hold or exit, Kunal?
Good time where you can look to book profits.
Okay, Ashish, a good time to enter TCPL packaging or maybe Anant Raj for a long term. This question is from Manira Laju from Andhra Pradesh.
Anant Raj, yes, I think is a good time to enter.
All right, with that we come to the end of the rapid fire as well as the queries. Thank you so very much, Kunal, as well as Ashish, for accommodating the show, as well as resolving all of our viewer queries. And viewers, with that we come to the end of this week's edition of Buy Now Sell Now as well. So it's a goodbye from Shrishti, our producer Boski, as well as our directors Ravinder as well as Santosh, and goodbye from me as well. See you next week.